So today we're going to look at MTD, what it is, and all the most common questions asked about MTD. So hopefully you finish this video and you've got a better idea of how it applies to you and what it means. So MTD stands for Making Tax Digital. It is a new way of reporting your tax information to HMRC. It applies to all sole traders and landlords or landladies who are currently, from April 2026, it will apply to those that earn over 50,000 per year. That is turnover only. So it's not your profit, the expenses don't come into it, it's purely your sales, your top line. If you are bringing in £50,000 or more per year, you must register and use the MTD reporting system from April 2026. So as I said there, for people with turnover of £50,000 or more, it starts from April 2026. For those of you who are in between £30,000 and £50,000, it's April 2027. And for those between 20,000 and 30,000, it's April 2028. There is no further deadlines or anything like that announced just now for anybody, for the rest of the sole traders beyond 20,000. But I'd imagine everybody else will follow after that at some point. You must sign up. It's not an automatic enrolment thing. You must use your government gateway ID and register for MTD through your government gateway ID. So there's a big massive list of HMRC approved MTD compatible software on HMRC's website. You can visit that, you can pick whichever software feels better for you. I personally use Xero in my practice, that's the only software that I use. So I know that Xero do a nice cheap package called Simple, and it was designed for MTD because there's a lot of people going from spreadsheets to software, so it's to make it quite affordable. Simple is just £7 a month with Xero, and it is MTD compatible. So you can pick between the softwares that are on HMRC's website. Yes, you can, but you need a bridging software to be able to do that. It's probably more hassle trying to use a bridging software than it is just getting like Xero or QuickBooks or whatever you fancy. The software is easy to use, it is more reliable, and it will make your life easier in the long run. It can be daunting, but it definitely will be worth it. There's been quite a bit of confusion around this. So you do send quarterly updates, but it's not quarterly like self-assessment submissions, if that makes sense. So it's cumulative updates that you send at the end of each quarter. So the first quarter runs from April to June. You have to submit that by July. And it's essentially just a report that says, this is what my income is so far, this is what my expenses are so far, and it actually tells you roughly where you're at tax-wise for the year to date so far. So it is a guesstimate. You'll get your final amount that you're due to pay at the end of the year like you normally do, but you do find that out at the quarter to see roughly where you're at. So it's really good for planning, like cash flow and your tax and things like that. You can put money away. But they are not final. So if you have left anything out, or if you notice that something's not quite right in your first submission, you can fix that in your second submission. So there's no you're not going to get penalised for making a mistake. Then at the end of the year, that's when everything has to be up to date and it has to be correct. And you'll do your final declaration at the year end, which has to be done after the 6th of April and before the 31st of January, just like your current deadline is. And everything else remains the same. So you've got to pay your tax by the 31st of January and get that final declaration in by then as well. That all stays the same, nothing changes. Digital record keeping can mean two things. So the first way that you can do it, that I find personally is the easiest, is you can snap digital records of your receipts. So you go to BP, you fill up with fuel, you jump back in your van, you can snap a picture of your receipt on your phone, and then you can throw the receipt away. So there's that version of digital record keeping where your actual copies of your receipts are kept digitally. Or you can keep a digital record of the transaction, which will be, in Xero's case, your bank feeds. Reconcile your bank feeds on Xero. and then the receipts are kept physically, so you can still keep your physical copies of the receipts as your evidence to back up your online digital records, if you like. So there's two ways of doing it. The first way that I mentioned about snapping the pictures is the easiest, and it means that you're not keeping piles of receipts everywhere as well, because your digital copy is your evidence. No, it does not. As I mentioned before, you still have your final declaration to do at the end, but that is essentially your annual tax return that you do. Everything else after that is the same. Your deadlines for paying tax, your deadlines for submission, it's all exactly the same. It's just how you submit it that's changing. So there's a new points-based penalty system coming into play with MTD. So if you miss any deadlines, you get points. If you get too many points, you get fixed penalties. It's similar to the driving licence point system. So more points, more penalties. So this is your total gross self-employment income. So any income that you make from self-employment activities, or if you've got property, any property income, that combined is your income that counts towards MTD. If you get dividends or any income from employment, those don't count towards it. They're kept separate. So it's treated separately. So if you have, say you have one sole trader business that's trading as ABC, that's the name of the company. You have another one that's trading as DEF. ABC needs its own Xero subscription and sends its own quarterly updates, and DEF has its own Xero subscription and sends its own quarterly updates. They have separate bank accounts, they have separate bank feeds, and everything is separate. That's how it should be anyway, and that's the best way for if you're ever investigated by HMRC. It's always better to have everything separate, even personal and business separate, but that's a different discussion. So yeah, they'll be kept separately and they'll be reported separately. So that kind of falls under the digital receipts bit. So if you are snapping pictures of your receipts and you're using the facilities that some softwares offer in terms of digitally storing your records, no, you don't have to physically keep them. If you are only doing the bank reconciliation in Xero and you're keeping the receipts separate physically, then yes, you must keep your receipts. No, it doesn't change the amount of tax you owe or anything like that. It purely changes how you tell HMRC about your income and expenses. The actual tax system isn't changing as such. So there is basic guidance out there, but HMRC will not advise on specific software setup or day-to-day bookkeeping within that software. Every software is so different, so they'll not help you with that. That's why having support during a transition like this is important, to make sure that you are doing it right and you're set up correctly. And I know that I am my own bookkeeping business, but if you currently do your own books and you're doing them correctly and everything's worked so far up until then, don't feel like you can't continue doing your own books even with the MTD system, because obviously I've used Xero's MTD system. A couple of my clients were due for the threshold. They're hitting the threshold next year, so I've registered them from April this year, so we're doing our quarterly submissions for that just now, and I have to say using Xero to do it is so easy. The biggest part is getting your bookkeeping done and up to date, which is always the biggest amount of work when you're a sole trader, even at end of year. So you're keeping on top of that quarterly, which can only be a good thing. But yeah, in terms of the actual quarterly submissions, they are very easy to do. It's not difficult. As long as your bookkeeping is done correctly, and you're confident that you can do it yourself, don't feel you need to engage a bookkeeper. I've actually created packages for those people that maybe just need a wee bit of support at the start until they get things going, because not everybody wants to onboard a bookkeeper for full-time support, especially if you've been doing your books yourself for so long. You definitely don't need it. So I do have 3 packages available, from very little support to a wee bit more hand-holding. So if you drop me a message, if that's something that you're interested in finding out about, there's no hard sell. I'm not here to try and fleece anybody. I literally just want to support people, hence why I'm telling you to do your own books if that's what you've been doing. But the support is available. Feel free to reach out. If there's any questions that you have that I've missed and I've not went over, please do comment or message me with your questions. I'm always happy to help. And I think I have captured most of them, what I've seen online. But again, any that I've missed, please do let me know. Thank you so much for watching.